Hi everybody, welcome to Jin's Wall Street News. Microchip Technology announced its earnings last Thursday after the bell, and it expects current quarter's revenue to decrease approximately 28% from a year ago. The U.S. Bureau of Labor Statistics reported last Friday that the unemployment rate fell from 4.1% in December to 4% in January. In addition, total non-farm payroll employment increased by 143,000 in January, below expectations. 10-year Treasury yield rises to 4.48% on upwardly revised job gains in November and December last year. For the U.S. stocks, S&P 500 fell 0.95% and the tech-heavy Nasdaq tumbled 1.36% last Friday. Shares of Microchip Technology fell 2.3% last Friday as the company announced disappointing earnings and guidance. Microchip Technology reported $1.03 billion revenue for the previous quarter, down 42% from a year ago, less than expectations. Adjusted EPS was 20 cents, down 81% year-over-year, below expectations. And the company expected current quarter's revenue to be between $920 million and $1 billion, the midpoint of $960 million, down 28% from the previous year, weaker than expectations. Microchip Technologies President and CEO Steve Sanghi talked about the guidance for the current quarter, quote, "We believe substantial inventory destocking has occurred at the customers, channel partners, and their downstream customers. Everyone would like me to call the last quarter the bottom. However, in our view, the inventory at the customers, channel partners, and their downstream customers had not fully corrected yet. Our bookings remain low, although the current quarter bookings are running at a higher rate than in the December quarter. Our backlog started out lower for the March quarter than it was at the start of the December quarter. So we have a lot of turns to take for the March quarter, and the visibility remains low." The U.S. Bureau of Labor Statistics reported last Friday that the unemployment rate fell from 4.1% in December to 4% in January. The labor force participation rate edged up from 62.5 in December to 62.6 in January. According to the establishment survey data, total non-farm payroll employment increased by 143,000 in January, lower than expectations of a 170,000 gain. However, the number of job gains in December was revised up from 256,000 to 307,000, and the number was also upwardly revised from 212,000 to 261,000 in November. The BLS said healthcare added 44,000 jobs, and social assistance also gained 22,000 jobs in January, so you get 66,000 for healthcare and social assistance. In addition, employment in retail trade increased by 34,000 and government employment added 32,000 jobs in January. 10-year Treasury yield had decreased last Tuesday as the number of job openings fell to 7.6 million in December, and the U.S. factory orders fell 0.9% in December, down 4 of the last 5 months. Then it moved down further as the U.S. trade deficit jumped 24% in December, and US services PMIs reported a slowdown in January. Then the yield rose last Friday as investors focused more on upward revision of job gains in November and December than the weaker than expected job growth in January. For the US stocks, S&P 500 fell 0.95%, and the Dow Jones Industrial Average lost 0.99%. The tech-heavy Nasdaq tumbled 1.36%. Most of the big tech stocks fell last Friday. Shares of Amazon dropped 4.05% as the company reported weaker than expected guidance for the current quarter. Most of the US chip stocks fell as Microchip technology announced disappointing earnings and guidance last Thursday after the bell. Okay, this is the end of today's news. Thank you for watching. Have a great day.